So how can I transfer money from my old 401k to a whole life insurance policy? You cannot directly transfer money from an old 401k or IRA to a whole life insurance policy because they're two different assets in terms of taxation, but I'll show you what you can do. So a lot of times we'll have people who have a lot of money in qualified retirement accounts. Now, firstly, they're almost always 59 and a half or older, and it's with an old IRA or old 401k that they can access the money. So someone might have a nest egg, call it of 3 million or any dollar amount, but they've got $1 million in an old IRA and they want to move it into a whole life insurance policy. We would not pull the full $1 million from the IRA out in one shot because I'd have to pay 40% tax on that, and that would not be smart. So we might pull $100K per year for the next 10 years. So I'm going to pull a total of $1 million from my 401k over the next 10 years. But I won't actually get $100K because anytime I take money from a 401k, IRA, or any qualified retirement account, I have to pay ordinary income tax on that. So if I pull 100 grand, I've got to factor in my tax rate, which will depend on my total income. So what other sources of income do I have? Let's just use 25% for this example. It might be higher than that, but we'll use 25% to keep the math simple, which means you pay $25,000 in taxes, and the net amount you're left over with is 75 grand. So for the next 10 years, you'll get a total of $750,000 into the whole life insurance policy. So it might look like this. These are numbers from an illustration I just ran. In the first year, you fund $75K. Your cash value will be about $60,000, and your life insurance benefit is just over $1.1 million. By the 10th year, you've now paid a total of $750,000. Your cash value is worth $880,000. So you've gotten some appreciation on the amount that you've deposited, and your death benefit is still $1.15 million. Now, after the 10th year, you don't add any more money. So your total out of pocket is still $750,000, but your cash value has continued to grow. It's worth $1.5 million. Your death benefit has also grown now, and that's worth $1.7 million. And if we look 30 years down the road, which at this point in time you'd be 90, your cash value is 2.6, and your death benefit is getting close to $2.7 million. So basically what we've done here is we've got you to the left, you've got $1 million in your old IRA, and you say, I want to move some of this over to a whole life insurance policy. The reason why is because this IRA is taxable when I pull it out. And you might have more than this $1 million in retirement funds as well. So you look to move that into a whole life insurance policy at $100K per year. I should say you pull $100K per year from your IRA, but because of taxes, after tax, you net a total of $750,000. So you've got 75 per year, which comes out to a grand total of $750,000. And then what we do is move that into a whole life insurance policy, which does several things for us. One, it gives you access to your money through the cash value. If we follow IRS rules, you can easily access that tax-free. And from a legacy standpoint, the death benefit is paid to your beneficiaries 100% income tax-free. This is really where you get a ton of buying power here, because if you die with $1 million in an IRA, your beneficiaries get that $1 million and they've got to pay income tax when they receive it. Whereas with a life insurance policy, if they get $1 million, or let's say you die when you're 20, or at year 20 in this case, when you'd be 80, that's $1.7 million they get, and that's paid out income tax free. So let me show you the actual illustration here. and we've got the IRA as well. So here we've got $1 million in an IRA for a 60-year-old individual earning a conservative return of 4%. He's going to pull out $100K per year, but we've got our tax rate of 25%, taxes of $25K per year, and a net distribution of $75,000. Then he's going to move that over to a whole life insurance policy, and the numbers you just saw in that chart are pulled from this illustration. So there's your cash value, there's your death benefit. If we look at year 30, there's your cash value at 2.6, and your death benefit is worth about $2.65 million. The only thing that I might adjust to this would be the tax rate, because that 100K is on top of whatever your income already is. And then if we adjust the tax rate, that's going to pull down the net distribution, which would result in us putting less into the whole life insurance policy. But how I move money from a 401K to a whole life insurance policy is, one, I typically have to be over the age of 59 and a half. It's got to be an old 401K. If I'm 60 but I'm still working, it might be difficult for me to access the funds in the 401K. But assuming I have access to that money, I am gradually taking distributions from that retirement account. I'm factoring in the taxes that I have to pay. Most people will just pay the income tax that is due from the distribution. So in this example, he took 100, he set aside 25,000 of that 100 to pay the IRS. Then he took the difference and moved it into a whole life insurance policy, and he can access the cash value all the way through. But the death benefit is really what's being used from a legacy standpoint to be paid income tax-free to his beneficiaries. I hope you enjoyed this video. If you did, please let us know in the comments below. And as always, I hope this helps.